I'm Francis McDonald and CEO of Lift Power. And Lift is a hard rock lithium developer based in Canada. So just to talk a little bit about lithium from a macro standpoint. So in the last years, we've seen a couple of lithium cycles. And looking at the price chart, you can see that the price increased from about 2015 to 2018, and that was on the back of the first wave of electric vehicle purchases being made. And then you can see the price runs down into 2020. And at that point, that's really when policy changes happened. The Chinese government was incentivizing electric vehicle sales as well as Europe and the United States. And what that did was drive lithium prices through the roof. So lithium price went from about $8,000 a ton for lithium carbonate all the way up to $80,000 a ton. And so it was a 10 times increase in the commodity price. And what that did was incentivize people to go out and look for lithium. And we found a lot of lithium, we brought a lot online, and that's caused the price to crash. And so for the last 2 years, we've seen rock bottom lithium prices, and we haven't seen any new supply come online. And so just talking on that supply-demand forecast and dynamics, so the left-hand side chart, that's looking at the surplus or deficit of lithium. And you can see the gold bars, we brought on a lot of supply, we had a lot of surplus, but we're really starting to get to an inflection point where most analysts are forecasting that in 2026 we go back into a lithium deficit. And that should cause lithium prices to start increasing. And what's backstopping that is really the demand side of the story. So lithium demand has been increasing 20 to 25% year on year. There's a couple of charts here. So this is, the top one is coming out of CATL's prospectus from earlier this year. And this is looking at ESS, electrical stationary storage, so big batteries for grid scale or renewable energy or AI data centers. And in 2024, there was 300 gigawatt hours that they produced, and where they think this is going by 2030, they see about 1,400 gigawatt hours for ESS. And so what we've seen is that ESS demand grew by about 56% last year, and this year it's already up about 100%. So we're seeing some major demand drivers that continue to drive growth and lithium demand, and we're not seeing a lot of supply response, which should be very constructive for pricing in the next years. So talking about Lift, so Lift, our main asset is the Yellowknife Lithium Project. It's located just outside of the city of Yellowknife, and the initial resource estimate is 50.4 million tons at 1% lithia, so this is one of the larger spodumene assets in Canada. I think the differentiating factor for us is the infrastructure. So we're really just outside the city of Yellowknife. We've got great access to road and rail. We've got a couple other projects as well, but I'll be focusing on the Yellowknife project today. People involved, so I'm Francis McDonald, CEO. My background is exploration geology, and I worked for Newmont Mining, the biggest gold producer, for about 10 years. And then I went on to an entrepreneurial path about 10 years ago and was involved in a 4 million ounce gold discovery with Sumitomo as a partner. I'll just talk to one other person here, Anthony C., who's around here somewhere, but Anthony was previously the MD and CEO of Galaxy Resources. Galaxy was the 5th largest lithium producer at the top, and they were also the first Western company to build a lithium refinery in China. So getting into our Yellowknife project, the city of Yellowknife is the capital city of the Northwest Territories. It's a hub in the Canadian North. It's about a city of about 20,000 people. And so on the map here, each one of the green dots is one of our lithium deposits. So you can see we're really just outside of town to the east of Yellowknife. It's about a half-hour drive to get out to where the deposits are. And they're all clustered along a paved highway, so they're within 5 kilometers of a paved highway. Going out to the west of Yellowknife is highway number 3, so a provincially maintained highway. that takes you down to the town of Hay River, and that's where the rail starts. And so that's what we're aiming to do is drive the spodumene concentrate down to rail. And then once we get on rail in Hay River, that continues down to the south. It's about 1,000 kilometers to get down to Edmonton. And just outside of Edmonton is an area called the Industrial Heartlands of Alberta. This area has a gas refinery that's operated by Shell. Dow has a chemicals facility. There's a nickel refinery, a cobalt refinery. And so this is an area that we're assessing to look at putting a lithium refinery. So that's the objective is building a lithium refinery there and feeding it from our Yellowknife project. This is what the lithium deposits look like. So the left-hand side is satellite imagery, and the big white veins crossing the landscape are the lithium deposits. So very easy to see, and on the right-hand side you can see in green there's a diamond drill rig, and it's just aimed at that big white wall of rock. Very simple, it's a flat landscape. There's some small lakes around, but nothing significant, so it's a pretty easy place to build a mine. The initial resource estimate came after about 50,000 meters of drilling, so that's 50.4 million tons at 1% lithia. And we didn't stop drilling because we were out of resource base. We stopped drilling because the lithium price was crashing and we weren't getting paid to keep drilling. So we believe that the lithium price is on the verge of turning around, and because of that, we're going to go out starting in February and we're looking to add probably about 20 to 25 million tons to this existing resource base. In terms of some benchmarking, so on the right-hand side of the chart, the bar chart that you see, this is the contained lithium in the initial resource estimate for all of the Canadian spodumene deposits. And so what we've delivered is the third largest initial resource estimate for any Canadian deposits. And where we are right now, so this is looking at all spodumene resources in the Americas, so North and South America. We're at 50.4 million tons right now. We think that on the next exploration program, we'll get up to where that gold dot is, and so in that top tier of deposits across the Americas. In terms of metallurgy, so we've got good recoveries, 79% recoveries across the deposits, giving us a 5.83% lithium concentrate. This is a DMS plus flotation circuit, and we are looking at a DMS only start on the Big East deposit, which is the largest and has the best recoveries. In terms of ESG highlights, so we have just come out of our first year of environmental baseline programs, and that's to get us into the mine permitting process. We have strong relationships with Indigenous communities. We signed an exploration agreement with one of the key communities before we started the exploration work, and we've also worked really hard at hiring Indigenous folks on our program. So last year we had 40% of our workforce as Indigenous people. So in terms of timelines and catalysts, we've just come out of a summer of environmental work, and we've also done some geotechnical and hydrogeology studies. We did a little bit of resource drilling that's just wrapped up, and we had some surface work at our Cali program. What we're looking to do is go into additional resource drilling in February, and that would last about 2 months. That will lead into a resource estimate update that would come out in September, and we'll look to put out a PEA around that time as well. Also, we'll continue the environmental baseline work. We need 2 years of baseline to get into the environmental assessment, and so we're aiming to enter into environmental assessment in Q1 of 2027. In terms of the share structure, so right now we have 47.3 million shares outstanding, about 2 million options, so fully diluted about 49 million shares out. Market capitalization is around 170 million Canadian, and currently have about 15 million in cash. In terms of ownership, early investors have about 50% of the company. About 10% is institutionally owned, and some of those funds are commodity capital and extract capital. Management and directors have about 2.8%, and we have one corporate strategic that has about 9.9% of the company. And that's Lift Power. Thank you very much.